Quick introduction for if you don't already know Immad. He is a British Pakistani, now in Silicon Valley, founder of Heyzap, that was acquired by Fyber. Was a partner at Y Combinator for a while. He's the host of Founders in Arms, which is a popular podcast. They recently had the Instacart CEO on there. He's an angel in a lot of startups, one of the most well-known seed investors in the Valley now. We'll talk about that later, and perhaps most notably, he's the founder and CEO of Mercury, which I have been a very happy, proud customer of for many, many years. I think since 21, maybe 2020, 2021.
Yeah,
So
we
before you
started
guys had
in
all.
2019. So
Okay. Darn it. You're late.
it's still early though.
But welcome, Immad. Did I miss anything?
Uh, well, I guess if people don't know Mercury scale, we just announced some stats. We have about 300,000 customers. I guess last year in August we were at 650 million in yearly revenue, and we're kind of profitable. We have 1,100 kind of employees in the US and Canada.
Yep. Yep. And Immad just published a annual letter recently for Mercury. If you haven't seen that, I encourage you to go check it out. I think you've been doing that for a couple of years now, right?
Yeah, this is the second one. It's kind of weird because when you first start a startup, you're very private about everything. But as you get closer to being a public company, you're kind of like, oh, you're gonna have to be more public about it. So we're kind of exercising some of that muscle around like the stats and like how we think about things.
Good, good. Just like Buffett, the annual letter. But just to add to what you said, for Mercury, um, 250 billion transaction volume, 300,000 customers growing 50% year on year. Um, One in three US startups use Mercury, which kind of jives with my experience. I thought it would be even higher, but one in three US startups use Mercury. Everyone I know uses Mercury. Um,
There's some
and
like bio startups where we don't do as well. There's still places for us to do better.
bio startups don't know what they're doing. Uh, And Mercury also, last year you also became a multi-product company, right? So we'll talk about that a little bit as well, what that means. But I saw you guys launched all, personal banking, credit cards, invoicing, venture debt, and also applied for your national bank charter this year.
Yeah.
Um, so what is that shift like going from being really private to now starting to be really public about things?
Uh, yeah. So I was in Pakistan till the age of 9, and then I moved to the UK till the age of 23. Then I've been in the US. So I'm like I have like a bit of each of the cultures. I think both the Pakistani and American culture is not like this, but the UK culture is quite humble. At least like you don't talk about like your if you're successful or whatever. So on a personal level, it's a little uncomfortable like tooting my own horn. But yeah, I think it's kind of healthy. One of the things that's probably the hardest part of Mercury is getting people to trust that, hey, you're going to put all your money that you raised in a startup. Like I had this conversation with someone like about 4 months after we'd launched, and he was like, "Hey, I love this product, but there's just no way I'm going to put $10 million in a startup's like fintech service." And I was like, "All right, you got a point." It was hard to convince him because I was like, "Yeah, that's like maybe it would be unreasonable to do it." But now we have lots of customers with more than 100 million. Uh, so I think part of the reason we're trying to be more public is like kind of, I think through transparency you kind of engender trust, and you're not just like some anonymous service with anonymous kind of founders doing like is it doing well or not? Like, it's such a crucial piece of tech for people running their business. Like, people want to know it's not just going to like fail tomorrow and they have to like go quickly move to another bank or something like that.
Yeah, yeah. I mean, your business especially is revolves around trust. And a couple of years ago, there was this big inflection point with First Republic and Silicon Valley Bank going down, right?
Mm.
Um, where a lot of startups, maybe 3 years ago, Silicon Valley Bank was like the default choice for larger startups that had tens of millions or hundreds of millions in cash, right? And when when that crazy week happened, um, can you walk us through what that was like for you? Because from the outside, I saw people sort of running to either Chase, big established banks, older banks, legacy banks, or Mercury, right?
Yeah.
But what was that like for you thinking about trust in a world where like Silicon Valley Bank and First Republic are shutting down?
Yeah, it was an interesting time. I think, one clear, quick benefit we had is that we were just much quicker to set up a bank account with. So, you could, if you went to JPM, it might take a week or you have to go to a branch. Like it wasn't like you just go to a website and like 5 minutes later you've like filled out a form and you can get a bank account pretty quickly. So, in terms of like having a product that was like right for the situation, it was good. I think the question that I was asked a lot was like, hey, if SVB is failing, like how can I trust Mercury kind of thing, which is like a very reasonable question. And if my answer is like, hey, dude, just trust me, like I'm good, it's not very, it's not very like trust infusing. So, what I would say to people is, oh, actually, we have normal banks have 250K in FDIC insurance. We have 1 million, which is what we had at the time. And you can get access to US government T-bills that are like in your name. Well, and the fund is, custodied in your name and it's not like something we can touch kind of thing. So I kept saying this over and over. It's like FDIC insurance and, money market funds or US government treasury funds. So we actually, over that weekend, we worked on a product which was called Mercury Vault, where we kind of we worked with our partner banks to get more kind of banks on the sweep network. So we grew our FDIC insurance from 1 million to 5 million over that week. And we made like a kind of like a visualization to say like, hey, your money is like in this FDIC insured place, or if you have more than 5 million, maybe you should set up the treasuries fund. So just like building that product just like really solved that question. Like literally after we launched that product, and we actually launched it over the weekend, like we started on like Saturday 10 a.m. and we launched it like Monday morning. But just launching that product just like really answered that question that people were like, okay, they don't have to like that trust like what Mercury's saying. They could like visualize where their money is and why they would feel like comfort over there. And in some ways that was like much more fulfilling than like what other banks were offering. Like obviously JPMC, you can say biggest bank in America, won't fail, but most other banks you still only had 250K in FDIC insurance, and no one expected SVB to fail. Like at the time, it was the 20th biggest bank in the US. Like that's like that was on the cusp of like feeling like it was too big to fail as well. So having a product that like really answered it and like saying like, hey, we're not in the lending business really. We're in this kind of deposit business where we're not like we're really like trying to spread the risk and making it so like your money's as safe as possible. So I guess the big lesson for me was like, like focus on your strengths. For us, like that strength is product, and building a product that like kind of answered the question and like kind of goes back to that transparency point, like really gave people visibility in what was happening, really like helped solidify our position. And it wasn't just like, we were really concerned that we would get like a whole influx of customers and deposits, and that would be like temporary because they'd be setting up like JPMC or Bank of America accounts, and then they'd move them out like 2 weeks later. But we managed to kind of keep 96% of deposits like 6 months later. So I feel like that product and how we kind of dealt with it was like pretty successful.
Yeah, I remember sharply from that weekend because there was this crazy weekend where everyone was panicking, and I had two founder friends. One of them was banking at SVB, and he literally ordered, he commissioned a Brinks truck, an armored truck, and he drove it to the
Okay.
bank. And he was like, give me, transfer the cash because they weren't letting him withdraw all his cash. And
I
so
mean, I don't
he,
think those bank branches are just sitting on like hundred millions of cash.
yeah, I don't know. He went around trying to get as much cash as he could out of his accounts. But I was telling him and another founder friend about Mercury, and I got the same pushback, right? And one of them was a biotech startup, so clearly they don't know. Uh, uh, um, but that was the weekend you guys launched Vault, and I was just shocked at how fast and how cleanly it was done. And suddenly you went from like, a million to a 5 million in FDIC insurance through the sweep network. That was so well done, and that was so reassuring,
Hmm.
right? As a customer, that A, you could do that, and you could do that quickly and cleanly. Um,
Yeah. I think a
um,
big part of his focus as well, like we basically had the whole company work on this, which, when you're a big company, you're always working on like, I mean, right now Mercury's working on like 20 different things, right? So it's very rare, and it's actually kind of fun. It kind of takes you back to your startup. Like when you're like a 10-person startup, you're only working on like one or two things, right? Like this, it's hard to work on like too many things. Uh, but when you're a big company, like attention is so like split between all sorts of things. But like these kind of moments, like really just make it so like, hey, there's only one thing we have to figure out, which is like how to kind of get these customers bank accounts and how to like kind of keep them afterwards. So it really like actually it was kind of fun moment for the team to feel like they're like doing something important. And yeah, it was a national news story, right? Which like
mhm.
yeah, we were obviously not the primary part of the news story, but like we were a big part of it. The few weeks afterwards, I kept getting recognized in like the streets of San Francisco, which I was like, is this my life now? But now no one recognizes me again, so
Oh,
which is better.
that's better. Yeah, um, just to change gears a little bit, can we talk about the early days of Mercury, right? You've exited one startup that, you've been working on for a long, long time. You're at YC. What was the thesis and behind Mercury, and do you think it played out the way you expected?
Um, yeah, I mean, it played out very well. Me and you've done lots of startups, and most of the time, the thesis and the reality is very different. But yeah, I often think about like why it was different this time. I think, number one, I had this idea for like a really long time. I had it in 2013, and I was just like really annoyed by how bad banks were in the US. Just like lots of fees, like the product never improved, and like it just felt like they didn't really care about you as a customer. Um, yeah, no way to get APIs. Like it was just like a very static thing, and it like maybe they had a crappy mobile app, but like nothing had really changed for like 10 years, right? Uh, while at the same time there'd been like all this like crazy evolution and like consumer and B2B products. So it seemed obvious to me this needed to exist. But when I first had the idea in 2013, I just figured someone else would do it because I was like, I know nothing about fintech or banking. So it was very much this kind of abstract concept that like someone really needs to fix this, but I'm not that person. Uh, but it just stayed in the back of my head. There's always like some ideas that you're like passionate about that you're like, oh, someone should do this. And like, I was also an active investor in 2016, especially, and or even before, I was always looking for someone else fixing it so I could like potentially invest in it as well. Um, and then 2017, I had this kind of, I guess, like crossroads where I sold my company. I was kind of thinking, should I be an investor, which is partly why I was doing kind of the YC thing for a bit, or should I start another company? And I decided to start another company. And this was still, I had like five ideas, but this was kind of the top one. I definitely thought this was the best idea. I thought the market was huge. I thought people would really use it. I thought I really wanted it. I thought it would be fun to build. My main reservation was like, I didn't know if I could do it kind of thing. And whether it was even possible, right? In 2017, there were not that many neobanks. Chime did exist, but it was basically just a card, right? Like it wasn't like a fully featured kind of bank account, which if you're serving startups, you need like a bunch of features. So yeah, eventually I got some confidence around it, but I still thought it would be hard. Like I actually raised $6 million, pretty much like at the start, on the basis that it might take 3 years to figure it out, like to get the right bank partners. We were trying to do a bunch of things that no one had done. Like pretty much no one had done like online business banking at all. maybe one person, but very rare. And I'm 100% sure no one had ever done wires online. I mean, now it sounds simple to like have receive and send wires for a fintech. But yeah, at the time, no one had done it. Like banks were mostly doing like ACH only as like a kind of fintech payment rail. But no bank, no startup would use a bank account that doesn't have wires, right? Like that would be pretty much
Mm.
useless. So that was like a strong requirement for me. So we had like a couple of things that was like we can't do it without it. Actually, one of the other ones was support for immigrants. I'm an immigrant. I figured like 50% of the successful startups come from immigrants, and often when they're first immigrants, they don't have U.S. residency yet, right? Like
Credit, yeah. Hmm.
so that was also something I don't think anyone else had done at the time. So I do think I was quite stubborn about these things, and it was really hard because we actually ended up doing like two different bank partnerships because of like the first one was like, yeah, we can do this, we can support this, and every month they were like, yeah, we'll enable it, but like nothing would change. Um, so but being very stubborn on like knowing that feature set because I was like, we're not going to launch until we have these three things, like online sign up, obviously, but wires and immigrant support. But I do think like having that like fairly complete feature set where like no one could like say, I'm gonna reject this because it's got this obvious thing missing, was a big part of like the success as well.
Um, and it ended up taking you, was it a year and a half, 2 years to
Yeah,
launch?
year and a half to
Something like
launch.
that? Year and a half. Um, so it's one of those like slow build but launch when you've got the full feature set ready that you think is compelling.
Yeah. I mean, there's so many banks out there, right? Like launching without a full feature set. Like, what will you learn from that? Like, the only
Yeah.
thing I would have learned is like everyone would have said, we need this one thing. Uh,
Mhm.
I also think which is, I mean, this is slightly counterintuitive. It's definitely against the whole MVP philosophy. Uh, I think it's actually hard to like build things when you have customers. It's a little easier to just like get everything right before you launch. Like as soon as you have customers, it's like hard to like transition them and imagine if we'd launched with our first partner bank that didn't have the full features, and then we would have had to like do another partner bank. We would have probably had to run both of them in parallel. We'd have to have migrated custom. Like it would have been such a pain. I think in general, it's like better to, if you know something is essential, it's better to just like get it done before launching, in my opinion.
Yep. 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 And I think Murthy, and I've talked about this also, is more and more it seems like launching with MVP, things are half baked or not complete, is a great way to churn customers who may not try you again for like another year,
Yeah,
couple of years.
100%.
Um,
Especially in a high trust situation, right? Like you don't
mhm,
want a bunch of reviews out there saying like Mercury's crap, it can't do this.
mhm.
Like there's just that would not be that would be like the exact opposite impression you want to make.
How painful was it? So this is not purely let's make better UX and better product and stick it on top and it'll be a great experience. You have to do like a lot of compliance, legal work at the back, um, finance work, sort of checks and balances. How painful was it compared to what you expected?
Uh, so I would say like a fintech company, maybe not all of them, but at least my experience is fintech products are like at least three times harder than a software product. I mean, actually, it might even be 10 times harder now with AI, but like in the past, like a software product, you just kind of spend 3 months, you build it, and then you launch it, right? It's like relatively simple. You don't have that many external dependencies. With the fintech product, you've got to like, yeah, do the software part. So like you have to have that. And like sometimes the software part is more complicated just because like I think there's like a lot of edge cases and like uh things that you have to like do in fintech. Then you have to like go integrate to like these kind of legacy payment rails or some legacy infrastructure, and those things are like worse than you can imagine. It's like literally still like SFTP files going back and forth with like really bad documentation and all this stuff. And then yeah, thirdly is the compliance and risk and fraud. Like there's a whole set of things. It's not just one thing. It's like everything you can do in fintech, you can be defrauded,
Mm-hmm.
or you can have a compliance risk, and the compliance risk can be like like it's not just one thing. It's like kind of manifold set of things. Uh, so it's definitely like harder. I would say I don't know. I'm an optimist in general, but I like to be prepared for the worst case scenario. So, like, I thought it would be even worse because I was like, oh my God, I know nothing about this. So I kind of like over prepared for how bad it might be. Uh, which is why I was like, oh, it might take 3 years. Like, I wanted to be like really prepared for the worst case scenario, just because, I think it's just like important to overdo the things that you're bad at. So, but because of that, it was actually not that bad, but it's definitely way harder than software.
Overdo the things you're bad at. That's a great soundbite. Um,
Makes sense though,
okay,
right?
yeah,
I
totally,
think,
totally, yeah.
yeah. I mean, the other related thing which I often see entrepreneurs do badly is like, like the things that you need to achieve between like each funding round. Uh, People don't always have a good idea of that. Like, I think it's, yeah, sure, there's one part of it which is like, oh, I need to get some level of traction or whatever. There's a set of things that like investors think of as risks, or things that they don't understand or whatever. And like a lot of the success of funding is like, how much of those things have you taken off the table? Uh, so like by the time we did our first round, I'd written no code because I was like, hey, no one will be like really worried about like can Immad and a team with Immad write code because I'd done like
Mm-hmm.
3 startups at that point and done lots of products. But I figured everyone would be worried about like will any bank partner work with Immad? Well, like does he understand like how he'd make money from this thing? All of these other questions. So that's what I spent all my time on. I talked to like 30 different lawyers. I had like 3 term sheets from bank partners. Like I did all this stuff that like would go and answer like the question of like all the ways that like Immad might fail. I tried to like have an answer to at the start, even though none of them involved like writing any code, which I think most people would find like counterintuitive when they like first
Mm-hmm.
start a startup, that like you don't go and write code straight away.
Yeah, particularly coming from a CTO, like that's like your go-to.
Yeah.
Um, um, One of the questions, there's tons of questions in chat here, but related to what we're talking about, you often warn founders about weak product market fit. What are the most deceptive metrics that make a founder think they have PMF and they don't?
Yeah. I mean, I struggled with this a lot at Heyzap. We actually did 4 full pivots at Heyzap, so I think your book is about
Yay,
pivots, so you'll be
pivots!
some. uh, but the problem is like if you're like pretty good as a founder and you're like just not willing to give up, it's really hard to tell if you have like product market fit or not because we would like pivot into something and then we'd sell the hell out of it. And like the first 6 months would look pretty good because it was like, it's a new product and like, yeah, we did like a social network and like we had like distribution deals with like other games. It was like a gaming social network. And we like quite quickly grew to like 1 million downloads, right? And like, I mean, that sounds pretty freaking good to like 6 months, 1 year, like we had 1 million downloads. Uh, but like we were really forcing it. Like we were like doing all these partnerships and we had like a good pitch to the partners. And yeah, it was like a low cost way for them to feel like they were getting something. But like these people would just not stick around. Like we would get all these users and like they would just quickly disappear. Uh, and actually, if we were like worse at sales, and we would have discovered the problem quicker because
Mm.
it would have just been like, hey, if we just put like 20,000 people in that and just waited, I mean, we would have seen that like no one recommended it to their friends. Most of the 20,000 disappeared, etc. Like that's not product market fit. But because we were like pretty good at just like selling the hell out of it, we just get like the stats like for the first year and a bit like just look great. Like every year it was like more people, more posts, more engagement. Like it looked good. It's just like if you'd have to like really look at the cohorts and churn, but then even that's tricky because we'd keep improving the product. So we'd be like, oh yeah, those early cohorts are bad, but the new cohorts will be great. Uh, so it was really like quite a painful lesson. And it was exactly opposite with Mercury. Like we basically just launched and we didn't, apart from like continuing to work on the product and support and all these things, we did like almost no distribution work for the first 6 months. It was all kind of organic and word of mouth. And I think that's like way healthier. So I mean, it depends on the space you're in. And I do think like the more mid-market enterprise startups are like kind of tricky to tell product market fit with.
Mm.
But with like consumer, prosumer, SMB, like the only way you're going to build a big company is if it's just has like this organic adoption. Uh, and yeah, you have to kind of figure out, what are the channels to get it. So I think it's kind of tricky, but but like really being focused on those cohorts, like looking at what customers are doing, are they really engaged, is like probably key to this product market fit question. We did eventually get it with Heyzap. I think but so with Heyzap, when we had product market fit, like, we would literally wake up in the morning and there'd be like a top 10 game in the App Store that was using Heyzap, and like no one had talked to them. And
Mm,
like the same thing happens with Mercury. Like we had, when we launched, 4 days later, someone had like deposited $1 million into a Mercury account and no one had talked to them, kind of thing. So I think like that's a pretty good signal. Like if like you're getting like this kind of success on like a weekly basis where like you're just like, where did the hell did that come from, kind of thing. I think that's like kind of, again, I'm sure people get it in different ways, but like that's kind of my definition of product market fit nowadays. It's like so good that like people are like kind of being sucked into it without like us pushing it into to them.
got it. And sort of a danger to that, you touched on it, being too good at sales. Like these days, a lot of startups do, paid user acquisition, right?
Yeah.
Some models, some versions of outbound or paid user ac. Do you almost think they shouldn't, like in the early days, or do as little as possible to
I
kind of
mean, there's
not mix?
the
No?
there's almost no shouldn't in the startup world because anything you say you shouldn't, there's like probably someone that's going to be like, I built a $10 billion company doing this exact thing you said you shouldn't do. Uh, so I don't think there's like a shouldn't. I think I would say like, hey, just don't fool yourself. I think that's like the most dangerous thing that founders do is like you kind of fool yourself into thinking like, yes, it's working. And, if it's like you're acquiring a bunch of users, but like, you're like, oh yeah, their 5-year LTV is going to be $100 and I'm paying like $100 to acquire them. But like, we'll grow the LTV and we'll get efficiency. And like, you can kind of fool yourself. I think being like realistic, actually, like most of the time, the cost to acquire users goes up, not down over time. So if you have like I think it's probably fine if you're like, spending $100 to acquire a user and you're making $300 in the first year. Like, I think there's plenty of people that built like big businesses with, those kind of ratios. But if you have like just don't fool yourself into thinking like, you're doing something that's kind of crappy, but somehow it'll be great in the end. Like in fintech, especially, like I remember this like really, 2021 was like peak fintech hubris. And I remember this really funny conversation where like someone was like, yeah, we're doing all this stuff and like, it's costing $18 of like acquiring a user, cost of capital, and all this other stuff, and we're making $6 from that user. It's like roughly that equation, and I was like, "What is this guy talking?" I was like, "The math is just so bad that like if it's costing you $6, I mean $18 to acquire $6 of revenue, it's just like it's hard to like fix that with scale,
Mhm.
right?" So I think that's like the main thing I would say. Like, don't fool yourself. I think if you want to build a really big company, you probably do need that organic adoption. I think it's hard to build a big consumer, prosumer, or SMB company if you're buying every user. But I think lots of people, especially early on, like buy users and experiment with that. I don't think there's like anything wrong with that as long as like you're being like very kind of honest about like is it working or is it just like are you just spending your way into like some success?
What near-death experiences have you had in your startup career? So if you think about Clickpass, Heyzap, Four Pivots, Mercury, have there been certain moments where you really brushed close to death?
I mean, Mercury has been relatively like smooth sailing, but yeah, every startup I did every every year was like I was like death was at the door, and
Death
like
was at the
I did startups from 2006, so for like basically 10 years, I was like every year was like very close. One particularly memorable moment was this like we were doing Heyzap, and this kind of social network idea was like kind of falling apart. And we were gonna pivot to ads because, especially back then, we had like a pretty reasonable scale on Android, and Android was still kind of new. This is 2013-ish, and we were like, oh, we'll go build an ad network in Android. But we were like basically almost out of money. We got this one deal with what's this? One of these Japanese game developers that just had like too much money. They gave us like a $60,000 check, which like was crazy for us because we'd basically not made any money in that startup after like several years. And they gave us a 60,000 check, and they said like give us users because we had this like social network that was doing pretty well. And we were like, okay, this works. Like, let's go build ads and build an ad network. But we were like almost out of money. So we went to our investor, USV, and we are like, hey, just, give us one last $1 million. And we promised we're going to like figure this out. And like, honestly, from a rational perspective, they shouldn't have done it, but they're great people and they gave us $1 million. And then we went to the team and said like, hey, we have $1 million. We basically have 6 months to get to profitability. Uh, and and then I was worried everyone would leave, and a couple of people did leave, but most people stuck around, and it was kind of actually fun because it was like such a clear goal. Like there was nothing else to do. It was just like you got 6 months. We're going to build an ad network, and we're going to get to profitability, or we're going to like stop working on this thing. And we did it. We actually like pretty much hit that deadline, maybe 6 or 7 months. But with profitability, the closer you get, the less stressful you get anyway. So we did it. And I, I'm not sure what the lesson there is apart from like push yourself and you can figure things out. And also like actually ever since then I've really appreciated having like lead investors that like really are committed to the company. I think like the party rounds that people do often feel that to them that they're easier, but like I've seen lots of situations where people have like 20 investors, but like when times are difficult, like no one steps up.
Mm.
Whereas like if you have one good investor that's like a lead investor, they can make like a big difference.
Do you feel you're a wartime CEO or a peacetime CEO?
I don't know. I don't know if I like quite agree with the distinction. Uh, I mean, I'm probably more of a wartime CEO. I mean, I feel like you know, I think there's this like need for urgency that I have that, and like, if there's anything like easy, I make it hard. Like, like take this
Mhm.
like multi-product thing, right? Like there's definitely a world where like we could just be like, hey, banking is working. Like let's just do more of
Take
that.
like 4 years to do it, right?
Yeah, exactly. Let's just like keep doing that and like, make it like 2% better every year, and grow that market share from 1 in 3 startups to like whatever. Uh, I just find that like I don't know, to some extent boring. It's
Mhm.
like I think it's much more fun to like go do new things and like whenever there's some calm, I like to throw some like new things we do and like not throw chaos but like throw kind of energy into it, and set like bigger things. I think actually like a lot of like obviously Elon Musk is like a extreme example of this, but a lot of success comes from like being ambitious and never stopping, right? Like it's like a lot of the extreme part of success. But I also think in the startup world, if you stand still, you get lapped very quickly. Like it's very even like if you take what Mercury's doing, right? Like uh, eventually we had lots of competitors doing like banking, but now we're not even competing on banking. Right? So like it's very hard to beat Mercury with just a banking product. Like you kind of have to have a credit card and a bank product at a minimum, because that's like kind of like by pushing ourselves, we kind of move the goalpost forward. Like most of our customers use both, and like I think it would be like too annoying for people to go sign up separately
Mhm.
at this point. But yeah, I think you kind of want to keep improving and keep doing things. And like for us again, we're like very product focused. So my view on like how you improve is like just kind of this continuous iteration on the product side.
Yeah, it's funny we have the quote in the book where startups are like sharks. They stop swimming, they die. Uh,
Yeah, that's a
you
great
know,
quote.
it's and I actually
There's
have another
a
one of your quotes in the book. One of my favorites is most startups die of suicide, not homicide.
oh, yeah. I don't think I'm the original source of that quote, but I don't know who it is. But yeah, it is a great quote. I like that.
Yeah, yeah. Um, as an aside, I'd love to, if you're open to it, love to send you a copy of the book
Oh yeah,
to
love that.
review it, especially since you've had some near-death experiences and pivots, and the whole book is about pivots.
Yeah, I know.
Uh, cool. Looking at some more questions, or if you have any favorites that you want to jump into, Immad, feel free to.
Oh,
But
there's
there's
so
one
many good
here.
questions. Go on. You pick one and I'll pick one after.
Um, What did how has Mercury's own go-to-market evolved, starting with perhaps YC and the YC community, and now more broadly outside of even startups? There's a lot of AI startups, there's a lot of YC, there's a lot of Silicon Valley customers. But how has that changed, and was it mostly organic? Did you find ways, things that work for you on the go-to-market side?
So at the start, the bulk was organic, and even now, about 60% is kind of organic and word of mouth. The two things we did at the start that were quite good were we did a deal with Stripe Atlas, and I think like for partnership type stuff, it's very important, especially at the start, to just be like have like this like amazing kind of product synergy in partnerships. For Stripe Atlas, if they incorporated someone but they didn't have a bank account, it was kind of useless. And before Mercury, there was no way to like get an online incorporation. That was like an actual good product. So like at the Stripe Atlas was really looking for someone like Mercury, and we showed up, and literally we launched in April 2019. I think we went live with our partnership in kind of November or December. Um, that was both good in terms of customers, but also like was a to go back to the trust, like the fact that like Stripe was working with Mercury when Mercury was in its infancy. I think that also helped kind of engender that trust. So that was good, and yeah, we did. We were not a Y Combinator company, but I'd done Y Combinator twice, and I was a part-time partner there, so I kind of understood how to play that game, and I'd noticed over time that you could become like the tool that like a group of startups used, and that was really important for us. Like I wanted to become like SVB would be one, and Mercury would be the second kind of bank account that you'd kind of turn to if you're a startup. So uh, that was one thing that helped there is just like I was so close to the startup ecosystem that like I understood what startups cared about and how to speak to them. Uh, we did a lot of podcasts and things like that as well. So again, like if you have some famous VC on a podcast and they're sitting next to you, that can also like shows like, hey, if
Mm-hmm.
that person is talking to Immad, then he must be legit and Mercury must be legit kind of thing. So we did a lot of things to kind of have that like brand. There's probably some like branding term for it, but like sitting next to other brands that were bigger than us, basically to like have some like brand trust kind of leakage or whatever. Uh, so that was not like direct GTM, but that was like an important part of our initial stuff. But a lot of it was and continues to be kind of organic and word of mouth, and it's always, at the start I remember when we did our like A and B, it was always tricky to say like, hey, it's organic and word of mouth, and they'd be like, okay, how do you go, like, how do you like? They really wanted a story that was like, if you give you $100 million, you'll turn it into $200 million of revenue.
Mm-hmm.
Whereas for us, it was like, yeah, we'll just keep doing things that are good, and we'll get more users. And I mean, now it's a little more convincing because we've done it for like 7 years. But definitely at the start, it's like a little bit harder than like a sales-driven startup where you can say like, oh yeah, this is the pipeline, this is how big the sales team will be, and this is how it'll like keep growing.
Yep, that's great. You have a favorite question here?
Uh, there's one. What is the one non-obvious metric you track at Mercury? Um, I'm gonna say something that's like probably kind of funny here, but like I think at the end of the day, you need to like grow your like net revenue, or gross profit or whatever, like whatever's like the core revenue metric. I feel like people get like overcomplicated and go like, oh yeah, like care about this KPI, ignore the revenue, you'll get that later. And like maybe that's true for some startups, but I think it's again, and I've done this in Heyzap many times where I'd be like, I'd focus on some KPI and like whatever, like if you're pretty good and like you're hungry, whatever KPI you focus on, you will like make it grow. And like for a long time, like with that social network, we'd be like, how many users are we getting? I was just so focused on that, and like at the end of the day, it didn't matter. Like we had 10 million downloads, and like it was still a failure. But like revenue, like it's hard to fool revenue, right? Like especially if it's like revenue
You
after
can't
like the
fake revenue.
cogs.
Yeah.
Can't fake revenue, right? Like can't. I mean, you can fake revenue, but you can't fake gross profit. So at the end of the day, if you just focus on gross profit, like you're probably going to end up building a good business. So that's like it shouldn't be a non-obvious metric, but actually, like often things startups are like, they'll send me like investor update and it wants it gross profit and it wants it net revenue, and I'll be like, what is the success here? It's just, like, And it's quite easy, I think. There's many startups where you can just, even if you focus on ARR, like you could still be fooling yourself. So I think like being like very real to yourself is like, I guess that's like a repeated thing that I've learned over time. You want to pick a question?
Yeah, maybe let's touch on something we haven't talked about is your investing on the investing side. You've been a very active investor, Rippling deal, hundreds of startups. Is it over 300 now? 400?
It's like 350-ish, yeah.
350? Um, what do you look for? Um, Paul Graham, for example, has written about this a lot, right? And he's like, he looks for formidable founders that seem unstoppable at the gist of it. But at the pre-seed or seed stage, early days, what do you look for when it's not obvious?
Yeah. Um, I think one thing I do that maybe many other investors don't do is, I guess my experience with Mercury was that like, even if you're a formidable founder, like having the right idea at the right time matters, I think, a lot, and maybe more than being a formidable founder. I guess to go to your other point, like, yeah, maybe they'd pivot into it, but with Heyzap, I pivoted like 4 times, and the exit was fine. But I think if we just had a good idea, we would have been, yeah, I wasn't like that much better at Mercury as a founder. Like I would have been able to make a good idea work. So I'm very ideas focused for two reasons. Number one is what I just said, like the luck and timing matters so much, and the market size matters so much. And number two, like I'm partly investing because it's kind of fun to like talk to founders and hear interesting ideas and have fun. Like, like another B2B sales SaaS software, it's just like boring at this point.
Mm-hmm.
So it's much more fun to me to hear like an idea that's like truly innovative and exciting and like big market. And like, that's just like something I get excited about. And I think it's like fairer to founders I invest in if I'm like investing and I'm like really excited about what they're building, and I'm much more likely to be kind of helpful. So I'm quite ideas focused. And the second part is like this kind of, like formidable founder is like kind of vague. I look for founders where like they really, really deeply understand what they're talking about. They can like have this idea of five
Mm-hmm.
whys from like Amazon. It's like you can ask them like, oh, why is it like this? Why is it like this? And you just ask like 5 times. And like, every good founder I've ever talked to can like go like 20 whys deep, right? Like they can go, they've just thought about it. It's like, as an investor, you've only thought about what their problem is for like maybe 30 minutes, right? And they've thought about it for like years. They should be able to go like very deep into like what they're thinking about. So that's one way to see like formidableness, and then the other one is like what are other places that they've done things, either startups or maybe from school or whatever, where they just like showed that they were just like grinding it, right? Like just not willing to give up. Did things that like you would be like, oh wow, that's like kind of crazy that they went and did XYZ to like do this. And if like you speak to someone and they've just never done that, like they've never gone and like built something and like stood on the street corner to sell it, or like whatever it took to like make that thing successful, like are they going to suddenly like do that at this like company that you're investing in? Maybe, but it seems like a lower probability at that point.
Yep. Yep. Um, Question from Murthy here. What's the best fraud story you've seen while investing? If you've seen any
Um,
fraud stories.
like people who are defrauding like me as an investor,
Mm-hmm.
or like
Mm-hmm.
I don't know. I mean, there's definitely stories where thankfully it's not as bad as one would imagine, but there's definitely investing, especially at the seed stage, is really based on trust. Like someone shows up, they show you some graphs, and like yeah, you can do some diligence, but there's not that much you can like learn about someone. So yeah, there's been like a couple of times. I haven't seen it that much recently. There's definitely been a few times. There's actually like quite a popular YC Pakistani startup that was like a massive fraud. I don't know if you know about that story, but
Oh
yeah, I don't want to
no.
like go talk about it. But yeah, I mean, like you raise a few $1 million, like that's a lot of money, especially if you're in Pakistan, right? Like you just
Mm.
like, yeah. There's been a few stories of people disappearing to Pakistan. There was another one that I remember was in Russia actually. This is pre-war, where like someone raised like 4 million, and it just turned out that they were just lying about all the stats, and they just kind of ran away with the money. So it happens, but yeah, it's like probably less than 1%. So yeah, it's kind of cost of doing business.
Mm-hmm. Mm-hmm. Um, what keeps you up at night now? What do you worry about? Is there
Um,
anything you worry about, or you've got 1,000 people, they're kind of taking care of everything?
I mean, I'm always worried about things, but it's not like worry. It's just like, I feel like my role as the CEO is to like just focus on like one thing at a time, whatever's like the biggest opportunity or the biggest problem. Maybe not one thing, maybe two things. So the essence of that means that I'm always worried about something. But it's not like an existential worry. It's more like, hey, uh, how do I do X better? Like, how do I improve this team because like there's some issue at the team, or like how do we get this product launch better? But uh, I think one attitude I try to have is, I've been doing startups since 2006. So what are we? Is that 20 years? Jesus. Uh,
Years.
I
Yeah.
think like I want to have fun doing what I'm doing, right? Like I
Mm,
think it'll be kind of shitty doing something for 20 years and like you're stressed about it all the night. So like I try to not be like, oh no, we're gonna die, blah blah blah. Like
mhm,
I
mhm.
want to be doing this because it's fun, not because like I'm kind of like I don't know worried about some existential dread. So yeah, I think yeah, Mercury is far more successful than I thought anything I would build would be. And I don't. I mean, I still want to prove things, but I don't need to prove anything. Like now, I'm like uh, trying to make it so I'm doing it for fun, which is like something I have to always remind myself as well. Like I'm not trying to. Yeah, it's easy to get kind of caught up with like some problem and get really stressed about it. But yeah, hopefully nothing keeping me up at night.
Um, it's really funny. When I was in my 20s, I heard this ridiculous thing someone say, where founders are in their 20s, they work on like consumer things like Sodomo or social networks or games. In their 30s, they work on SaaS. In their 40s, they work on fintech. In 50s, they work on healthcare because they're trying
They
to
should
solve their
die.
own problems, you know. Um, but
That
that's
is funny.
has that been kind of you've seen some truth to that in your arc or like founders, you know?
Yeah, yeah, to some extent. I mean, I think it changed with the kind of rise of B2B SaaS. There was definitely like for a while, it became like a bit of a formula that's like even with young founders would like show up and they're like, oh, yeah, go talk to some companies and go sell them B2B SaaS. So like that became like the dominant thing for the, when you say that, like for the pre AI, for the 5 years before AI, there was nothing else but B2B SaaS pretty much. Like that became by far like the only thing people were really working on, with some exceptions. And fintech was like kind of the exception. Uh, but there's definitely like a truth to it, which is that it is there's some types of startups that are just hard to build when you're like very early to the startup space. Like, I mean, even fintech, like you just some fintech you can do, but like you do need to raise a bunch of money up front to get a bank partner interested. Like I would say
Mhm.
today, like you probably need to raise 5 million before you can get a bank partnership because bank partners there's not that many of them. They don't want to waste time on someone who's like got no money and they think they're gonna
Mhm.
die or
Mhm.
something like that. So there are types of startups where like most young people without a track record can't go and raise $5 million straight away. So like maybe that does need to be a second startup unless you like are just like really good at pitching or something. Yeah, there's types of ideas and types of things that like you do need either some extreme experience or some credibility before you can do. And yeah, generally speaking, like the solo mo things are like easier to do with like no experience. You just like build it and like get some users and then like go raise some money.
Yeah, yeah. Touching on AI just really quickly, any predictions for this year, next year? Where do you think we're at in the cycle? Uh,
I
and
mean,
what do you, yeah.
I would say historically I've been uh like I mean, I've been optimistic about AI, but pessimistic about improvements to AI. Like, I haven't thought like, oh my God, like the next AI will get us to AGI, and like that's all. Like, bet everything on that. I've been more like, okay, like what can you build with this current AI? I feel like I've kind of switched a little bit in the last few months. Especially the stuff coming from Claude is like really amazing. Like the amount of kind of agentic things you can build, and like how much progress is made on coding and all of this kind of open claw stuff is like pretty crazy. So I just feel like we're just getting started. I'm like back to just getting started. So I'm pretty optimistic. I mean, I can't, last year I might have said, yeah, maybe we'll hit up against some sort of bubble or like we'll overbuild AI capacity. But now I think like it still feels like several years away. Like if we keep
Mm-hmm.
like these agents like are like a completely different use case where inference is like way more expensive, right? Like if you're using like a chat GPT, like you ask a question and it's done. Whereas this agents can go work for like several hours and that's like, 1,000x more expensive. Um, so yeah, it definitely feels like we're just getting started. I don't know if we'll hit AGI anytime soon. I'm still skeptical of that, but like in terms of use cases and things we can do and the power we can get uh, from AI, it's still early. Probably still like tons of startup ideas out there. Yeah, maybe I do think like I'm. I think some of the obvious things are getting done. Like I don't know if I'm interested in one more kind of lawyer AI pitch. I've heard so many of them, but like I think the next level deep is like still like early, and I think there'll be lots of like big startups that are still to be done.
Yeah, we're doing something crazy with AI for private aviation.
Oh
So
yeah,
Murthy is
like
running it.
taking over the plane, or what are you doing?
Someday, not there yet. Not there
I
yet,
thought
but
autopilot's already pretty good, right?
they're pretty good. Murthy is a pilot, and he identified sort of these missing gaps in when you're in the plane. You just need to go through like these giant manuals. You need to listen to ATC chatter,
Yeah.
the radio, figure out what's happening. It's information overload, and
The
he
radio
has
thing is crazy. Like it just sounds like gibberish. I'm like, I feel like a computer could do a way better job than
yeah
than like listening
yeah
to people talk back and forth.
yeah. So we're tinkering with it. Murthy's on it. But here's a good question, sort of related to the Peter Thiel. Like, what's something non-obvious that you most people don't believe it's true that you believe to be true? But the question here is, what's a hill you'll die on, no matter how unpopular it is?
Um, I don't know. I have so many hills. I'm trying to think of like a very startup hill, but this is probably like a not startup hill. Like I actually think America is not that capitalist. Like if you look at like almost every industry, there's so much government interference. Like I mean, healthcare, finance. Like most mortgages, not most, but a ton of mortgages are owned by the government. Like it's just like the amount of government interference in capitalism is like absolutely insane. And in many ways, I grew up in the UK, and like people are like, oh yeah, Europe is so much more socialist, but like spends about the same amount on a per capita basis on healthcare as America does, and you actually get free healthcare in the UK. So,
Mm-hmm.
uh, I really feel like a lot of the problems in America come from like massive government interference with capitalism. And if we just like got that out of the way a little bit, we could have like better healthcare, better housing, better education. Like all these things could be way better and better because they'd be way cheaper because like the government just makes things so expensive. Uh, I don't know what the fix to that is, but it would be nice. I was hoping like Doge and other things would like go make a dent in this, but sadly, I don't feel like we've made much progress still.
Yeah, it's quite sad. I mean, um, Elon was on that Turkish interview just last week with John, right? And he's like, it's 1,000% certain that America will go bankrupt unless we see giant productivity gains with AI or robotics or
I'm
space-based
really
programs,
skeptical about
whatever.
productivity gains. Like I'm pretty sure if we grew the economy by 10%, the government would spend 10% more money.
Yeah.
Like there's just like there's no like constraining factor. I mean, why are we spending so much money right now? There's just no reason to do it. Like spending 10% more money every year by the government is like very easy. Like that's just
Mm-hmm.
like slightly more than inflation. So like I don't yeah, like the thing that might happen, and this is like a real wild card, is like maybe AI will lead to government efficiency, right? Like it's like, maybe government will be like, oh, actually, like the permit process doesn't need to take 9 months because like we can have an AI look at like your application and get it done in 1 month, or a week. I mean, that's I can't imagine government being that good at adopting new technology, but like maybe there's like some hope there.
Yeah, I mean the incentives aren't there, right? It's sort of show me the
Yeah.
incentive, I'll show you the outcome. Is you need to have high integrity and you need to have the incentive and competence to care and
I
cut
mean, maybe
government
there's
spending.
some incentive, like at state governments, like there's just a big debt hole, and state governments at least
Mm.
uh, can't go. They have to balance their budgets, generally speaking. So there's maybe some hope there that like at state governments they like are forced to drive some efficiency, and maybe that I don't know. I'm not really knowledgeable enough about the government side of things.
Um, we're running close to time here, but any advice, any sort of things that you'd love to share with founders who are early starting out, particularly of sort of Pakistani descent or in the diaspora, sort of all over the world. I know this is a pretty global community here. Uh, yeah, any advice that you wish someone had told you early on in your journey that you'd like to share?
Uh, hmm. I mean, that last bit makes it like a little trickier. I think there's a. I'll talk about this one because I think it took me a long time to figure it out. Like, I think like even when you're small, like culture matters a lot. Uh, and people would always say that, and I would always be like, I don't know what you're talking about. And I remember it was like, having beers in the office at like on Friday was like culture. But yeah, I basically like eventually came to my own understanding of it, and I would say it's more about like what are the personalities you care about and what matters to you, and having. I don't think there's like a right answer. I think it has to be like true to you about like what your culture is, and then it has to be something that works for the market you're in. So like a good example is like Uber needed to have this like super hyper competitive aggressive culture because they had to like overcome like every local jurisdiction having like basically hating Uber and wanting to shut it down, and they had this like crazy competition with Lyft and like globally. uh, but that's not the culture at Mercury. Like we are very like product focused, and we look for people that are very thoughtful and care about craft and things like that. But if you try to blend those two cultures, it's like A, wouldn't be true to me, but B, it wouldn't come out with like a good company. There'd be like this continuous kind of clashes. And I think a lot of problems that happen, like politics and like co-founders falling out and like all these things, like the root cause is like incompatible cultures or like unstated cultures, like they don't really know what they're like trying to achieve. A lot of problems I had in my previous startups were like actually like cultural in root. There's a really good book by Ben Horowitz, like The Hard Thing About Hard Things. I think that's like probably the best culture book. But just like I don't think you need to like overthink it. Go read that book, spend some time, like spend a day and like going like, okay, what are things I care about? What are personality traits that I like? And just write down like a list of 6 of them, which is like kind of what we did very early on. And then we try to hire around like finding people that are compatible with that.
Great. No, that's such a great book. Hard Thing About
Yeah.
Hard Things. Worth reading twice.
Oh, at least.
Yeah, yeah. Um, cool. I have a question. You touched on this briefly at the start of the call, public, private. But when's the IPO happening?
I mean, no imminent plans. We just started this kind of bank charter process, and that will take a while. Like, first we need this conditional approval, and then there's work to do to get like open the bank doors, and then there's like a 3-year kind of plan to like get it fully up and running. And from a I think one of the things you want to be when you're a public company is like fairly predictable and have like a not like crazy transitions. So we're probably going to wait until a bit into that process. But a lot of the muscle that you need to be a public company is very similar to the muscle you need to be a bank. Like you need to do quarterly filings. You need all this governance in place. Like all of these things. So I think by the time we've kind of got the bank ready, we will probably have taken like some percentage of the steps we would need to take to be a public company. Yeah, I mean, if everything goes all good in the next 3 to 5 years, probably.
Okay. Well, we're rooting for you, cheering for you, and if anyone watching does not have a Mercury account, I'll just drop a link here. Uh, Referral link. I don't know if Immad has a special one with extra freebies, but
I should probably have one, right? But no, I don't have one. But it's so
uh,
good, you don't need a special link.
There we
Uh,
go. There we
but
go.
yeah,
Yeah.
we
No,
also have
it's
Mercury Personal, so that link is I think for business. But do you use the personal one?
I do. I was on the closed beta. I think I was one of the early ones. And
Nice.
yeah, I've been using it for over a year. It's honestly like the best banking experience, bar none. And what you said at the start of the call is like the banks, your thesis for Mercury in 2017, 2018, like they don't do this, they don't do that. They still don't do it. We're in
Yeah, they still don't. I
2026
don't
and they're
think they
still
ever
not
will.
doing I mean, you can actually search your transactions. You can send a wire in 30 seconds. You can like enable, disable debit, credit cards. You can change spending limits in 3 seconds. Like you can't do that on any other bank on the planet. Like, um, um, and there's ways to like put your money in money market funds in a couple of clicks. It's incredible. So hats off to what you've built, Imad, and thank you for being, I think, genuinely an amazing founder who wants to give back, not just by doing, talks like this, giving time to other founders, the community, but you've done crowdfunding rounds in your journey, right? You've allowed people to invest and be a part of the success story, your customers, your small businesses, SMBs. Paklaunch also banks with Mercury as well, the community that is hosting this chat with Ali. Um, but thank you so much, man. Appreciate the
Yeah.
time.
Well,
Um,
thanks
if
for having me.
anybody wants to
Yeah.
get in touch, should they follow you on Twitter, LinkedIn?
Yeah, Twitter is probably the easiest way. I try to look at every message. I don't promise responses just because there's so many, but yeah, I will
Okay.
at least look at it.
Okay. Well, thank you so much, Iman. Take care, and thank you,
Yeah,
Ali.
good chatting. Good seeing you, Ali.
Take care. Bye
Thanks.
now.